Good afternoon, hello and welcome to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad. And looks like the festive cheer has begun in Dalal Street because after the weekly expiry battered the market yesterday, it's a completely different screen today and looks like we are on the onset of the festive cheer. Because if you look at both the frontline indices, they're up in the green and not just in green but very quite sturdy in the green at this point of time. If you look at Sensex, up about 500 points. Nifty has also reclaimed that 25,300 levels. We did see in the day that Nifty reclaiming that 25,350 mark as well. But right now it has cooled off from those levels and it's now up about 160 points as of now. But this marks also the 2 days of downward movement that the cheer has come in the markets as well. But yes, stock specific action that continues in today's tradings as well, given that the companies are reporting their second quarter results. We did see Tech Mahindra that reported its results yesterday, and brokerages have been cautious on the counter after the company cut its dollar revenue growth guidance. So that's why we did see the stock trading in the red as well. Tech Mahindra seeing a loss as of now, with about 0.7% decline for Tech Mahindra. But yes, apart from Tech Mahindra, what stood out from the IT sector, that was your persistent systems. That's how growth from both from the revenue and margins front. So good gains that came in from there as well. And the stock was trading with about 6 to 7% gains as well. ICICI Lombard, that also did well in today's trading session after a good set of numbers that came out for the company. So we'll watch out for more results, reaction that will be paving the stock reactions as well. HDFC Life, Axis Bank, all of them will be reporting their second quarter performance. And then apart from, but yes, from market perspective, it has been a good day. If you look at all the sectors, they are trading in the green, apart from the Nifty Media Index showing some sideways consolidation, 0.1% decline coming in for there. But yes, Wix has been cooling off further, 5% decline coming in from there as well. And broader markets, if you look at Nifty Mid Cap and the small cap indices, both of them are up and about. But yes, to understand how the last minutes of the trade look like and the way ahead, I'll go across to Ashish Bahety, Technical and Derivative Research Analyst at ProfitMart Securities. Ashish, after 2 days of Nifty being down, we are back above in the green and Nifty has reclaimed the 25,300 levels. What lies next?
Good afternoon, Lovisha. It's been a good week so far. At least I'll say that today's turnaround has turned out to be a good trading session for the Nifty. And after continuously we've seen last 2 weeks, market has been resilient and been strong on the upside. So buy on dips is holding very well. And today's the way advanced declines have, or the broader market contribution have shaped up. That is really looking impressive. And the best part is IT contribution have started coming up again. We've seen other than Infi and some stocks like Tech Mahindra, they've been down. Otherwise, more or less large cap IT stocks have been doing good. So that has been good, and banks has been really been very strong. So anybody who's holding long should remain long. Our target for Nifty is almost 25,800, which we may see till Diwali. And for Bank Nifty, one can go long even these levels. We're expecting Bank Nifty to touch 58,000 mark very soon.
Okay. Bank Nifty also doing well. But yes, Ashish will also be seeing some numbers as well throughout this week. Axis Bank, HDFC Bank, ICICI Bank will be reporting its second quarter performance. Anything that you're finding interesting on the charts as of now?
See, overall, I'll say on the banking side, ICICI has been looking very strong compared to the entire private sector banking. And the best part is from last 4 weeks, it has made a nice base, or it's made a profit base around 1370 zone. And today it started moving from that price point. And just today itself, stock has regained its 20 moving average. So we are hopeful that ICICI Bank may move up to 1430 zone. So one can go long even these level or chase the momentum.
Okay, all right. Let's also talk about Nifty Auto Index because that has done well after 2 days of consolidation. But Ashish, the index has been consolidating in a higher range as of now. With the festive season on the horizon, Diwali on the horizon, can we expect some good moves coming in from there?
See, in this entire, I'll say, auto sector was the first sector which started moving. And now auto has just cooled off a bit so that the other sectors can contribute to the Nifty rally. So we remain very bullish on the auto sector, and this consolidation is a good opportunity to go long on the selective auto. Our top pick from the auto sector is the two-wheeler autos. They look really good on the chart, specifically stocks like TVS Motors and Aisha Motors.
Okay, okay, all right. TVS and Eicher Motors from the auto space that is coming in. But yes, let's also shift focus and talk about Nifty Realty because that has been one of the top sectoral movers of the day. Ashish, anything that you're finding interesting from this space, from the Realty Pack? 3% gains coming in for the index itself, and it is one of the top sectoral movers.
Yeah. So out of the entire six realty stock in the F&O listed space, all are doing good. There's a good open interest built up in the entire realty sector. I think one can go long in the DLF, which is still up only 2%, whereas we are seeing Prestige is up 4.5% odd. So DLF and Oberoi is looking good. They've not contributed to the rally, or they've just doing the catch-up momentum here. So DLF and Oberoi, one can go long.
Okay, DLF and Oberoi, these are your top picks from the realty space. Now let's also talk about some of the individual movers. Let's talk about Paytm first because that stock has been holding up well, 2.5% gains coming in there as well. And there was an interesting brokerage note from Axis Capital where they have given a double upgrade on the counter to buy from an earlier rating of reduce. They've also raised the target price to about 1500 from 950 rupees, and the revised price target implies that there could be another 15% plus potential as well. Now, this is also the joint second highest target price that the company has received from the analysts tracking it after we did see Ventura also giving out a similar target price range. But yes, Ashish, let me get back to you. The stock has seen a secular uptrend this year. What can we believe that lies next for the counter?
So it's a little high beta stock, though it's part of the FNO, but we have advised our clients and we advise people to not to go long on the FNO for on this particular stock. It's a good delivery based stock, and now on the new tech businesses, it's a good stock one can have in the portfolio, or should have some allocation in the new tech age businesses. So Zomato and Paytm are the two stocks from the new tech businesses where one can go long, can keep a delivery based buying here. So the way it has now moving up from its 25 August highs, I'm sure the stock is well placed to move up to 1400 plus marks very soon.
Okay, that is the view coming in for Paytm. Let's also discuss about Urban Company. I know it's a newly listed counter, Ashish, but that stock did well and it snapped its 5-day losing streak. In the last 5 trading sessions, we did see that this stock declined by about 12%. But what can we make of the next moves? Right now, it's trading with about 9% gains, nearly 10% gains, in fact.
Yeah, so we'll say to just wait a bit for the Urban Company, because it's been the fourth or the fifth week after the listing and the price discovery is yet to happen. Though the listing was good, but however, after post listing, we've seen there's some correction, and we usually advise to wait for at least first sell off to happen in the any of the new age listed companies, and after that get into those stocks. So if anybody is holding long, can stay long here, but just maintain a stop loss of 155 in this company.
Okay, all right. 155 is a stop loss for Urban Company. Now, let's talk about the stock of the day. That is your Persistent Systems, right now commanding about 7.5% gains. And the stock's move comes after the Q2 results were a beat on estimates on both the revenue and margins front. If you look at the revenue figures, 4.4% quarter on quarter revenue growth in terms of constant currency. EBIT margins also rose about by 80 basis points to about 16.3%, and brokerages, they've largely remained on the bullish on the counter. If you look at CLSA, they've given in a high conviction outperform, wherein the brokerage does expect another robust quarter for the company, driven by growth in its order book, revenue, margins, and return on equity. The management has also reiterated its $2 billion revenue target by FY27, alongside a 100 basis point EBIT margin expansion, which could be expected in FY27. And they are expected to deliver about 29% of CAGR in EPS over FY25 and 27 as well. Today, we can see the stock is doing quite well, 7.5% gains coming in there, almost near its day's high level as well. It's maintaining the momentum throughout the day. But Ashish, what lies ahead? We have a strong management commentary. Q2 results have been strong, and the stock has done well, quite well today.
Yeah. So, Lovisha, we think the street has overreacted to the generative AI threat for these tech businesses, and have, I think, painted the entire tech industry with one brush. However, we firmly believe that generative AI would be a good opportunity for the mid cap or small cap IT companies. However, the large cap IT companies will be in pressure. So we have seen TCS, even after the numbers they were corrected, and Persistent on the other hand have reacted strongly after the numbers delivery. So one can still go long, or one should find opportunities on the mid cap IT for going long. And however, we remain bearish on the large cap IT. So the trade setup here becomes that if the IT is showing strength or one has to go long, then go on the mid cap ITs. And if you have to short the IT, then certainly short the large cap IT stocks like Infy and TCS.
Okay, all right, Infy and TCS. Let's get in your view for Power Mech also. The stock, of course, right now it's trading at about its day's low, but we did see that the company bagged a new order of about 2,500 crore rupees from BHEL itself. Ashish, what can you believe? I mean, there is a consolidation zone where the stock has entered, oscillating between that 2,900 to 2,800 zone. What can we expect? Can the sideways momentum continue?
So there's been some profit taking today after the LC news on this power Mac, and but stock is still above trading above its 20 DEMA, and after yesterday's gain, we've seen some profit taking here. But I think it's a good support zone near 2,700 in this stock, and from there we have seen the stock rise again to back to 2,900 zone. So anybody who's long should keep a stop loss of 2,700.
Okay, all right. 27 of stop loss. All right, let's move on and talk about HDB Financial Services. The stock is expected, the company is expected to report its second quarter numbers today, but the stock has been quite range bound ahead of the results performance. Now, what brokerages are expecting that the NIMs are expected to expand between about 10 to 12 basis points, while credit costs are expected to remain between 2.3 to 2.7%, and in excess of that 2.5%, brokerages expect that it could impact the profitability of the company. Loan growth is also quite steady from a Y-on-Y perspective, but sequentially it is expected to remain modestly by about 3%. Ashish, let's get in your views on HDB Financial Services. The stock is not only trading below its listing price, but is also below its IPO price. What can we expect next?
Yeah, so it's been a bit of disappointment with parentage of such a high pedigree. The stock has not been able to perform after the IPO, and the day on the listing day itself, the stock has made a high of 890, and from that day onwards, we are seeing continuously or relentlessly selling in the stock. Stock even corrected or trading at near its IPO pricing. So one should remain cautious here. However, it's a good company. So anybody who's holding long should keep a stop loss of 720. We're expecting to bounce back. We're expecting some bounce back here on the stock.
Okay, all right. That is the view coming in for HDB Financial Services. Let's talk about some of the other IT names, like we were talking earlier about. Persistent systems. Let's get in your view on Tech Mahindra as well, because we did see that the company report a very dismal Q2 performance, where we did see that the net profit has declined by about 4.5%. But yes, the company also saw a slowdown in its auto sector, and they've cut their FY27 estimated dollar revenue growth to about 4.6% in constant currency terms. Ashish, where do you stand on Tech Mahindra, and is it on hold for a counter? And of course, specify some of the levels for Infosys also ahead of its second quarter performance.
I'll say Tech Mahindra is more of, we can classify as a large cap company now, considering its market cap. So here we are seeing most of these large cap companies, IT companies, will want to find it tough to maneuver and pivot into this new AI era. Whereas the advantage would be more towards these mid cap and small cap IT companies. So Tech Mahindra is certainly under pressure, and stock has not been able to hold its 20 exponential moving average also. So it's been consolidating in that zone. However, we think it's our personal view that one can exit Tech Mahindra in these levels and shift their position to the mid cap IT like Persistent, Coforge, or even LTTS.
Okay, LTTS also we can shift back to some of these names. All right, let's move on and talk about Eternal, because the stock has just hit a new high, and just in the past 1 month, the stock is already up about 9% itself. Ashish, what can be the next target, and what is your view on Swiggy also? Where do you stand on both? Because Eternal is also expected to report its Q2 performance tomorrow.
Yeah. So we are remain bullish on both Eternal and Swiggy as well as the Paytm. But however, we are advising not to chase this momentum by way of any futures or options, or not to chase this momentum in F&O market. However, it's a good delivery based buying. So make a basket of these new tech businesses and allocate at least 5 to 10% of your overall portfolio into these new tech businesses. So Eternal, Swiggy, and Paytm, along with Nykaa, remains our top pick in this space. The way stock has been continuously making higher highs, we are hopeful that stock will touch or surpass its 370, 380 mark very soon. So one can go long, just trail the SL or keep a small SL of near 340 zone.
Okay, all right. 370, that is where the next target could be for Eternal. And what about Swiggy? Any targets that you're watching out from there?
Yeah, so Swiggy is doing a catch-up rally. Eternal is already trading in its all-time high zone. Swiggy recent high was around 470. So we are hopeful that Swiggy will soon touch that zone again. So one can even go long in these levels also in Swiggy, but just maintain a stop loss of 430.
Okay, all right. 420 is a stop loss for Swiggy. Now let's shift focus and talk about Tata Communications. Well, the stock has hit about its 52-week high, and in the past 4 days, the stock is already up about 18% itself. Today, also, the stock is doing quite well on the back of its second quarter performance, where the net profit has of the quarter has fallen about 3.7%, but revenue has seen a good growth of about 2.3%. EBITDA has also grown by about 3%. However, margins remain flat at about 19%, so to say. But Ashish, the stock is doing well. Can the momentum sustain? Because in the past 4 days, the stock has been up and about.
Yeah. So we've seen a good rally on the 10th of October. Stock moved 10%. And the best part is the stock is not part of the F&O now. So there's no shorting opportunity available. It's only delivery-based buying or selling happening here. And after the 10th of October, we've seen 2 days of consolidation. It was an inside bar. And today again, stock has given a range breakout of above the 10th October high, which was 1950 zone. So we are hopeful that this momentum could lead to stock heading towards 2100 zone also. So anybody who's long should stay remain long. Just trail the SL to 1900.
Okay, all right. 2100, that is what the next target for Tata Communications could be. All right, now let's shift focus and talk about the next stock in focus, that is your SRF, because we did see a brokerage note by Antique where they have initiated a buy coverage on the counter and they've given out a target price of about 3540 rupees, which explains about 16% of upside potential that the brokerage note has been targeting. Now, what they've explained in their note is that it is a leader in the refrigerant gas, and given that the company is a diversified and established a niche in a fast growing high margin fluoro specialty chemic segment, and that is what has kept their bullish statement intact. But yes, the stock has started this month on a good note, Ashish. We did see a period of consolidation, but can we expect more to catch up on the horizon?
Certainly. So in last 3 weeks itself, the stock has rallied almost 11%, and from the support zone of 2800, stock has steadily moving up, and it has conquered back its 3000 mark, which was a call writer zone also, and stock have comfortably challenged that area of 3000 and surpassed that zone. So we have seen clearly a call writer moving out, or the unwinding of those calls at whichever placed at 3000. We expect the stock to move to 30 to 50 zone very soon.
Okay, all right. That is the view coming in from SRF. Let's take another stock in focus, that is your Wellspun Enterprises. Given that the board has approved convertible warrants, which is worth about 1000 crore rupees itself, and that is why you could see that the stock is doing quite well, nearly 7% gains coming in for the counter as well. But yes, from the past 1 month, the stock has picked up a good momentum. Ashish, what can we expect next? What are the levels that we can watch out?
The overall stock has been showing strength, and there's a clear price volume breakout today happened in the stock. The volume which clocked in was almost close to 2 million shares, which is 4x of the average volume which ever happened in the stock. We believe that stock is now heading for a 600 plus mark, but don't chase the momentum right now. If anybody wants to go long, just waited for any retracement near 540 zone. That could be a good entry point again. Anybody who's holding long should maintain a stop loss of 530 in the stock.
Okay, all right. 530 is a stop loss for Wellspun Enterprises. Let's shift focus and talk about IRFC because that company reported its second quarter results today, and the stock is doing well despite because given that the net profit has risen by about 10% from the last year, and revenue, however, that has fallen by about 7.6% from a year-on-year perspective. Ashish, what is your view on the counter? So far this year, the stock has been underperformer. Right now, it's off its day's high, about 0.4% gains. But what lies next for IRFC?
So we are we are a little bearish, I'll say, on the railway stocks, and we think there's not much of the opportunity or the headroom here in these stocks. So as a sector, we are avoiding railways in totality. But anybody who's holding long should maintain a stop loss of 123 here.
Okay, all right. 123 is a stop loss. All right, let's take stock of ICICI Lombard because that stock has been doing well on the back of its second quarter results as well. And given that the management has been targeting faster growth than peers in FY26 itself. But yes, today the stock has been holding up well, 6 to 7% gains coming in for the counter itself. But yes, let's get in your views on this particular counter. Ashish, what are we expecting from ICICI Lombard? Nearly 10% gains coming in for the counter.
Yeah, so stock did hit a upper circuit of 10%, and then and it's almost trading in near that zone only up to still 9%. And it's been looking very strong on the charts along with the entire insurance space. You'll see SDFC Life and SBI Life is also contributing on the upside. So it's clearly given a range breakout or a price volume breakout, and it's now above all the July mark. So we expecting the stock to move up to 2100 zone.
Okay, 2100 zone, all right. Let's shift focus and talk about Nestle also because the company will be reporting its second quarter results tomorrow. And let's start expecting a mixed performance across the key segments given that the demand trends are showing gradual improvement because of the urban consumption slowdown. But margin pressures are expected to continue because of higher input costs, particularly in coffee and palm oil. But yes, the stock has been doing quite well, nearly 4% gains. Ashish, how does the next moves look like?
So we think some of the FMCG company will gonna do good for the next quarter, and that's what the street is trying to price in for these stocks. So Nestle is a good stock to accumulate for 1 or 2 quarters from here on, and that clearly the GST benefits will start spilling over from this quarter itself in these stocks. So on chartically also the stock has given a clean breakout above its and made a base around 20 DEMA and given a breakout from that zone, and stock has surpassed its recent highs or a cluster of highs which were made from April to July, and that was a zone where it was getting resisted. So it's challenging back its resistance zone, and we are a little bullish on this stock. We expect the stock to head to 1300 zone very soon.
Okay, all right. 1300 zone could be watched out for Nestle. Now let's shift focus and talk about L&T because the stock is trading near its record high levels. 2% gains coming in for the counter, and the stock has already hit about 10-month high itself. Now this is coming on the back of some of the order wins that the company has witnessed today. It has secured about 7 new contracts, which is worth about 40,000 crore rupees from various companies, and they have also won 3 large orders, 2 significant contracts, and 1 each major of an ultra mega contract. L&T, where do you stand? The stock is doing well, and of course, it's near its all-time high levels, Ashish.
Yeah. So you can see since March 24, 2024, stock has been to this resistance area at least 4 to 5 times. And from this area itself, they have seen some correction. It is challenging the area almost for the 6th time. And technically, this is looking like as if it will break out. And if the breakout happens, the stock can even move to 4200 zone. So we are expecting another 400 rupee rally from here. So another 10% move can easily come in this stock from even from these levels. So certainly it's a good buy even in these levels. One should maintain a stop loss of 3750.
Okay, all right. That's the view coming in for L&T. Let's shift focus and talk about RBL Bank also because the stock did well today and it's almost hit that 5-year high as well. Ashish, where do you stand? Because we have some reports that saying that the NBD Emirates is in advanced talks to acquire about 51% stake in the company, and that's why we are seeing good run up. Yesterday also we did see good run up.
So Honestly, Lovisha, we're a little shy away from the stock. There's been a good rally already happened in the stock from March 2025. This stock was trading at 150 zone and it's already doubled from that zone. So we believe that it's not wise to chase this momentum right now. Let the news come in and price does settle down and the price to reflect those events. After that, only eventually it can chase the stock. However, on the banking side, I think one can go long in ICICI or even Federal, even in these levels.
Okay, ICICI and Federal Bank, those are the topics from the banking space that you have. Let's take another stock in focus, that is your GTPL Hathaway, because the company did report a mixed set of performance for the September quarter, and that's why the negative sentiment has played out in the counter. 2% downtick coming in for GTPL Hathaway. Now, what does the Q2 numbers look like? If you look at the consolidated profit levels, down about 46%, whereas if you look at from the revenue perspective, total revenue is up about by 12% from a year-on-year perspective. But yes, Ashish, the stock has been exhibiting a downward trend today, and in the past, past 1 month also, the stock has moved nowhere. What can we expect? Can we expect more downside in the upcoming days?
Certainly, I mean, if you see yesterday itself, stock has made a high of 180, and from there we have seen a massive profit taking or a sell-off happen in the stock. And again, today's stock is in pressure. It is advised to exit the stock if it even in these levels.
Okay, all right. Let's take stock of the markets where it is at now. 40 seconds to go before we hit the close. But we'll discuss one stock in focus, that is your Ola Electric. The stock is doing well today. It's jumped about by 4-5% on its likely foray into the energy storage market as well. Good volumes coming in for the counter. But Ashish, let's get in your view for Ola Electric. Anything that you're watching out from the counter?
So it's been a little notorious stock. We have seen some news comes up, the stock that's a rally for 1 or 2 days, and then again there's a sell-off happens. So I think from the two-wheeler space, there are proven names like TVS or even Hero Motor one should go rather than going for Ola Electric.
All right, all right. Just the last rates coming on your screen for Nifty. We are closing above that 25,300 levels. Good close for the index as well. Nearly a percent gains coming in for Nifty index, and of course, 183 points. That is the uptick that is coming for the index, and it has broken that 2 day of losing streak that we saw on Monday and Tuesday itself. Sensex also closed with about good gains, nearly 600 points, 0.7% gain coming in for there as well. And majority of the sectors have done quite well today, barring your Nifty Media Index, which is down by about 0.5%. Otherwise, if you look at the sectoral perspective, all of the sectoral indices have ended in the green. If you look at the Bank Nifty Index, quite done well today, nearly 0.5% gains coming in for there as well. Nifty Auto Index closing with about 0.3% gain. Nifty Metals, she's seeing a gain of about 1% itself. Nifty Realty, however, that is one of the top sectoral performers for the day. Nearly 3% gains coming in for there as well. Pharma index also up and about with about 0.7%. And if you look at the consumer durables, it has been extending rally today as well with about 0.8% gains as well. If you look at the broader end of the markets, also look quite resilient. Small caps and mid caps, both of them have given out good gains, and mid caps definitely the outperformer out of the two with about 1% gains itself. Wix continues to cool off, 5.5% decline coming in from there. Given that we are deep into the earnings season as well, and more of the stock specific reaction will continue in the upcoming days as well. Top gainers on the Nifty 50, that include Bajaj Finance with about 4% gains. Nestle also doing well ahead of its Q2 results. We did discuss the stock in detail earlier as well. Bajaj Finserv, that also did well with about 3% gains. Trent, Asian Paints also with about 2.5% gains coming in for there as well. However, on the top losers, losing end, if you look at Infosys, nearly a percent decline coming in ahead of its September quarter performance. Some of the negative sentiment reaction could be coming in from Tech Mahindra's dismal Q2 performance as well, where brokerages have been giving out a hold rating on the counter. Bajaj Auto also seeing a cut of about 1%. Tata Motors once again down with about 1% decline. Tech Mahindra on the back of its Q2 results with about 0.7% decline. Axis Bank and Max Healthcare, some of the other losers on the Nifty 50. But yes, let's discuss about Bajaj Finance. Coming back to you, Ashish, one of the top gainers of the day. And how does the chart look like for the upcoming days?
Yeah. So this stock has been have always outperformed the market and has been clear I'll say the relative strength has been very strong in this particular stock, and we've seen many of the NBFCs trading below its 20 dem or still in pressure, but this stock has been continuously making higher highs. A perfect portfolio stock, I'll say, or describe it as that way, and stock has exhibited all the qualities meant for a perfect portfolio stock. One can go long even in these levels or chase the momentum by keeping a stop loss of 1020. We Our target for Bajaj Finance is a little long. We expect the stock to touch 1200 very soon.
Okay, all right. 1200 very soon for Bajaj Finance. Let's also take in your view for Asian Paints because that stock did well today, one of the top Nifty gainers. But the stock has been an underperformer so far this year, Ashish. What can we expect the next moves to be? We will be having its Q2 results as well soon.
So, from this space, I think Pidilite is a little better placed compared to Asian Paints. Asian Paints has been consolidating, and we've seen there's a pressure in the Asian Paints. Whenever the stock rallied and come near 2400 or to 2500 zone, we've seen the sell-off happens in the stock, and the stock has made a range or trading range of on the upper side it has been near 2500 to 2600, and on the lower side it has become 2300, which has become acting as a support. So if anyone can play in this range, it's a good stock from the trading perspective to play between that ranges. But however, on the portfolio perspective, I think Pidilite is well placed. Its stock is way above its 200 daily exponential moving average and above its trading near its 20-day exponential moving average. So one can go long in Pidilite. Asian Paints is a good trading stock.
Okay, Asian Paints is a good trading stock. All right. Let's also discuss about HDFC Life because it has come out with its Q2 performance. And if you look at the NII, that has stood at about 1.8. We'll discuss the numbers later in detail, but the stock has closed well in the green, 2% gains coming in for the counter. Ashish, how does the stock look like? It has reported its second quarter performance already.
So yeah, the stock was in pressure certainly from last 2 to 3 weeks, but today it is shown the first exhibit or the first sign of a reversal. And stock has rallied beautifully during the trading session. The sector tailwind has become very strong after ICICI Lombard commentary. So I think insurance as a space is looking good. One can go long in this stock or can chase the momentum. We're expecting the stock to hit again 800 zone very soon.
Okay, 800 zone very soon, likely for HDFC Life. We'll get to the numbers later in detail. Just now, the company has reported its second quarter performance. But Ashish, coming to the last question of the day, what are your top picks at this hour? We are headed to the festive season, but anything that you're finding interesting in the markets?
So, from the hotel space or the luxury or leisure space, so I think ITC Hotel is available at a fair price, 270. It's been today's close, and stock has corrected from its recent high of 250. So, this is the first day of the reversal. We can say one can keep a stop loss of 210 and expect the stock to rally back to 235 to 240 zone. The second stock looking good is the DLF on the charts. That stock has also exhibited good strength, and it has done a crossover of exact 20 and 200-day exponential moving average. So we expect the stock to have a next target of 790. One can keep a stop loss of 730 in DLF.
Okay, all right. All right, with that, we have to let you go, Ashish, but wishing you the best of festivities and a very happy Diwali.
Thank you, Lovisha. Seeing you. Wish you the same.
Thank you. All right, before we go to our next guest of the show, of course, the markets have closed in the green and it has been quite a good run up given that Sensex has closed with about 500 points gain and Nifty is also settled up with that 25,300 mark. We'll watch out whether or not tomorrow it can sustain above that 25,350 mark as well because today we did hit those levels, but we came off those levels steadily and swiftly. But we'll get to the numbers of HDFC Life in a bit. And Axis Bank is also expected to report its results today itself. But we'll watch out more for the numbers which will be due tomorrow, which is your Nestle, Eternal, Infosys, LTI, Mindtree, all of these companies which will be reporting their second quarter results in tomorrow's trading session. But yes, coming from a sectoral perspective, it has been a good day for the markets. given that all of the sectors did close up in the green and in the positive territory as well, barring your Nifty Media Index, which showcased some sideways consolidation, and it closed with about 0.5% decline. Otherwise, all in all, if you look at Nifty Autos and Bank Nifty, definitely one of the stellar performance that came in from the financial SPAC ahead of some good results which will be coming in as well on Saturday as well. We have some big names on Saturday, that is your HDFC Bank, ICICI Bank, IndusInd Bank. All of these three banking giants will be reporting its September quarter results. I mean, if we go by the business updates, of course, the credit growth has been picked up from majority of the private lenders. We'll watch out for the deposit trends and, of course, how the margin trajectory looks like for the upcoming quarters, because so far it has been tepid on the back of the RBI's rate cut, and majority of the lenders have been repricing that as well. But yes, Bank Nifty did well today, nearly 400 points gain coming in for the Bank Nifty index as well. Nifty FMCG also held up well with about nearly a percent gains. Nifty Metal also with about 1% gains. PSU banks also with about 1.5% gains coming in for there as well. Consumer durables also held up well in this market with about 0.8% gains. And of course, if you look at the broader end of the markets, they were the clear outliers of today. If you look at the Nifty Mid Cap Index, that actually surged with about 1% gains. If you look at the Small Cap Index, with about 0.8% gain as well. So both the broader end of the markets also did well. And WIX, that continued to cool off with about 1% decline. Given that, the WIX decline, of course, it is indicating that there is less nervousness, which is also building up in the markets. And of course, we could be headed for a steadier Q2 performance, and of course, the results which is coming in from the India Inc. perspective as well. But all in all, it has been a good day for markets. If you look at the advance decline ratio also, it is a complete contrast from yesterday's market as well, where about 2,000 shares have advanced and 1,500 shares have declined. So it's a complete reversal of how both the days the markets have been performing from yesterday itself. But yes, now let's quickly shift on focus and move on to our Moneycontrol's special Diwali programming, where we do understand the sectors that grabbed the headline in summer 2081, what the way forward looks like, and some of the top picks from the space as well. So introducing you to another edition of Fireworks and Fallout Themes. Alright, in this edition of Fireworks and Fallout Themes, we will be putting the spotlight on EMS sector. Now this summer, the stocks from the EMS space have showcased a mixed performance, but the Indian electronics manufacturing story is entering its most decisive phase yet. So from just assembling gadgets to actually building the brains inside them, EMS companies are climbing up the value chain, and brokerages, they are calling it the next multi-year growth engine. Now backed by the government's push for component localization and rising global demand, the sector is fast transforming into the India's Make in India power play as well. But yes, sir, to discuss how the sector has fared this summerwards and what lies ahead, we have with us a special guest who will decode the length and breadth of the EMS space. Joining me is Praveen Sahay, research analyst of PL Capital. Praveen, good afternoon, and wishing you the best of festivities and a very happy Diwali.
Yeah, hi, good afternoon, and wish you and your audience as well.
Praveen, let me start off with the first question. EMS stocks, they've showcased a mixed performance in summer 2081. While some of them have doubled their value, some have also declined in double digits. Take us through how the summer has been for EMS sector, what the outlook looks like for summer 2082.
Yeah, definitely. The last year they had performed. Some has performed very well. Some definitely has given a negative return. So I can say that those who are have a very strong order book, very strong growth, diversified throughout the different verticals, different segments. And also the diversification in the customer base and the clear roadmap towards the backward integration, they had definitely did very well. Like Amber, Sigma, Avalon kind of a player has given a 55 to 90% of a return, Keynes as well 20% plus of a return, whereas some names like a Cyient, APEC or the PZ, they are in the negative because of the growth what we anticipated as a street, they had not matched that, and also there is some seasonal impact to that, so that is the reason. Secondly, on the players, as I say, that's which have a weak order book or the weak visibility related to the margin improvement had not done well. Now, from here onwards, I am quite a positive on the players who are diversifying largely to the customer base, to the sectors, as well as backward integrations. So those are expected to do well from here onwards as well. Definitely, you can say the valuation is one of the catch from here. That's I believe those who are continuously focused on the executions, focus on the return profile and the capital discipline. So they will able to deliver the earnings as well as the return stock returns you will see in the future.
Okay. Praveen, right now the MS industries were estimated about 3 lakh crore rupees, but Street has been pointing out that it could reach by about 8 lakh rupees, 8 lakh crore rupees by FY29. So what in your view will be the biggest growth drivers that would take it from just an assembler to a true component manufacturer?
Very excellent question. But one thing is, we are largely assembler, whether it's a contract manufacturers or the EMS space, the PCBA. Now we are gradually moving. That is a very long process, I can say, towards the component manufacturing. Because in the PCBA, the PCB itself, bare PCB account around 15 to 25% of the cost. And now we started building some our ecosystems in that, some big names like of a Sirma, Amber and Keynes already announced their big capex towards the PCB manufacturing. The other things in the entire component space is a compressor, plastic molds, or in the OSAT space, some display panels. These are the spaces where some activity is going on. Right now, we also need to create our vendor development. So these, EMS player also required a local supplier for such products. So those are the long fetch story I can say from here onwards by 2030. As you highlighted, that's a 8 lakh crore by 20 FY29. Then by that time the component ecosystem will also get developed, and from right now 90% import of a PCB, we will reach to around 30-40% of our local manufacturing of a PCB, and the other components like a motor or a compressor will also get developed. So definitely, as the opening remark you mentioned, that's this is in the long-term growth trajectory the EMS space is entering, and I am in the same view. These are also getting backed by the government, the PLI scheme or specs schemes. These are facilitating the ecosystem for a component manufacturing. So I'm quite a positive for the way forward for the EMS space and the component manufacturing as a main theme for that.
Okay, okay. But Praveen, they have always seen, quite margins have always remained in the low single digit for majority of the EMS players. Right now, they are majorly focusing on margin expansion, and they're driven by shifting their attention to higher value segments like automotive, industrial, and clean energy. But do you think that this margin improvement is sustainable, or is it just a short-term mixed benefit?
So for the margin, we need to understand we started our EMS journey from the consumer segment, consumer durable space, contract manufacturing. And largely, like still, if I look at more than 60% is related to the mobile ecosystem we had created. There definitely the margin profile is a lower. When we go up from the consumer to the automobile to industrial to EV component to clean energy or a medical, your margin profile from a mid single digit go to the up to a 20%. So just to give you some more sense in that, like consumer give around 4 to 5% of a margin, whereas industrial fetch 15 to 20% of a margin here. Automobile from a 7% to around 9%. So when you go up in the value curve in the sector wise, your margin profile usually go up. One is that. Second thing is a backward integration. If you go for a PCB manufacturing or the plastic molding or sheet metal, these are the component for the contract manufacturers as well. So their backward integration also brings some margin levers. Third thing is the scale. Now we started with a very small scale in our EMS journey, and that's the last 4 years is the journey accelerated with the government support. When the scale up these facilities, that's also brings some operating leverage. So all three things I believe will brings the margin improvement. And like if you look at the Keynes who fetch around 15% of a margin right now at the consolidated level, so because they are more focused on the industrial and the automobile, and so as the other players are also like of a Sirma reducing their consumer segment contribution and improving the auto industrial IT services businesses more, and the margin improving to the double digit. So what I can say, the way forward, we will see around 100, basis points of an increase from the historical average from here onwards in the next 3 years.
Okay, 150 basis points of increase. Praveen, India still imports about 90% of its PCBs, but companies have been investing to aggressively change that. So how realistic is the timeline for this meaningful import substitution in majority of the core components?
Yes, rightly you highlighted that's a majority we import right now, and in that, as I said, that's the in the PCB around the 15 to 25% is the PCB manufacturing. PCB cost is the 60% cost is of a component like a IC or a capacitor resistors. Right now, we are developing, and we are as a government giving a lot of incentive programs to develop the ecosystem of a PCB manufacturing right now. The major players like Amber, Keynes, Sirma has already announced for their capex plan in the PCB manufacturing. One. Second thing, they had already also with these capex announced the JV with the technical tie-ups. Like a Sirma with Sahay JV they had created, Amber Korea Circuit JV they had created to bring the PCB manufacturing, and not just a single layer or double layer, but the multi-layer and the flex PCB manufacturing, which is a need of our, which are used in the EV as well as smart phones. So the commitment right now from the Keynes is nearly 14 billion rupees. Same Sirma has announced for 91 billion USD. Even the Amber with the two of their ventures in the PCB manufacturing, that is 35 billion in the Korea Circuit JV and 6.5 billion rupees in the SN Circuit. So that's overall three major players are putting up around 60 billion rupees in the couple of years to create the PCB manufacturing. And I believe that's not only these three, there is some more players are coming in. And from this 90% of our import dependency on the component, by FY30, it will be from the 10% to a 30%, 30 to 40% India manufacturing of the component to reach.
Okay. Praveen, that's rightly you pointed out that, more companies are aggressively moving to PCB manufacturing, and we've seen a huge capex also being planned between FY25 and 28 itself. So do you think that these companies have the balance sheet strength to absorb that kind of an upfront investment, or could it pressure the returns in the near term?
Yeah, exactly. You are right. I don't see there is a big balance sheet of these players, and that's what we had seen in the past. And the last year, we had seen a lot of fundraising, QIP, when the debt raising happened related to the expansion. And in the next couple of years or 3, 4 years, we will continue to see such kind of activity in the EMS space. Because these ecosystem development is capital intensive. Return profile definitely will be muted. Once the scale will come in, definitely we will see some kind of a improvement. And the most important here is for the development of a component ecosystem, government support is required. And that is why the government has given like of a 65% incentive in the OSET. Similarly, 65% of an incentive, which is a mix of state and the central government. towards the PCB manufacturing. So those supports, the government continuously need to come out, and if these players will utilize those, definitely the return profile would be at the level where they are operating at. But definitely this fund requirement thing is that definitely would be there. Balance it is not as big as to factor in this. So the government support as well as the equity or the debt raising activity we will continue to see in this sector.
Okay, okay. So there's huge capex also lined up, and we'll be hoping that there's margins recovery that takes place in the upcoming quarters as well. But Praveen, if you look at several of the counters, they're already trading at about 50 to 60x of their FY27 earnings. So at what point do you think these growth expectations start to look over optimistic?
No, so the point is, this sector is in the nascent stage. Government, as I said, is a 65% of incentives. Some are upfront incentive, some are incentive-based incentives. So definitely, the government focus on, like example of a OSET where the 50% is upfront capex the government is doing. So that entails that the growth story in this sector to continue. And also the margin, as I said, when we go from the low segment to the higher segment of industrial or the medical or the IoT, our margin to improve. So in that, we have to give some optional value for the future growth prospects because this sector itself is in the nascent stage. Definitely in our numbers, if I look at 27 or 28, definitely the OSAT or the PCB manufacturing to the some players we had factored in, but the execution is a key. Like those who has already performed in the last couple of years, delivered whatever they guided, a strong order book. Those who have like Keynes have a 7,000 odd crore of order book to their PCB assembly unit only. Apart from that, the PCB manufacturing and the OSAT numbers to also flow in by 27, 28. And that is why everyone is discounting those as well in the valuation. And that is why that's the valuation is a quite a stretch over here. And I believe in the coming years, such kind of a story, the valuation to continue to be at a higher side.
Okay, okay, all right. Praveen, but much of this EMS growth story is also driven by the global supply chain diversification away from China. So do you see India capturing a meaningful share of that opportunity?
See, if I compare with the China, we are far, far behind that. And to capture the growth from, China plus one strategy, definitely there are an opportunity and we are actually focusing on. Whether this is reached to a 10% of that, 15% of that, time will tell. But the kind of a capex the sector is doing, the kind of a diversification in terms of the segment or the technology partnership we are doing with large MNCs from the outside, there is a possibility in the next 5 years we will capture around 10 to 15% of the global EMS shift from the China to India.
Okay, okay. All right, just one last question before we let you go, Praveen. We are stepping into the new Samvat. Which names do you see the leading the next leg of this rally and why?
Yes, so the next year, what I am seeing is those who are, doing a lot of a capex, diversification in the business, backward integration also. I'm liking those players. So the first name is the Amber. Amber going away from their RAC or the consumer durable segment towards the electronics. They had already announced three of the inorganic acquisitions this year. The JV, Korea Circuit JV also has been announced so far, where the major capex is lined up for them, PCB manufacturing, and that too in the multi-layer and the flex PCB. So there we are expecting that segment which contributes quite a low right now, which is around 20% of that. That's there we are expecting 35% of a growth story in the next 3-4 years. And on the big, because they are the leader in the RAC and the RAC component manufacturing in this country, and we are also positive on the overall RAC demand for the next 3 to 5 years would be in the range of 15 to 17%. So they are the major beneficiary of that. So in our expectations that the company in the next 3 years, 25 to 28, grow at nearly around 27% in the CAGR in the EBITDA, as well as PAT to be grow at a 50% CAGR. So, and the return profile is also ROC is in the range of around 20%. So we believe it's a better placed valuation, also supporting comparing to the peer set. This trading at a 47 times FY 28 earning right now. So 43 times FY 28 earning. So I think this is a well placed right now. And next year, Amber to give a good return from here. Second name is Keynes, because Keynes is the player in the PCBA segment, has done a lot in the diversification. So the industrial, auto, medical, these are the major segment. They are have a very strong order book, 7,000 odd crore of order book they have already in the PCBA. They are diversifying business towards the OSAT and the PCB manufacturing. Fourth quarter onwards, we will start seeing some numbers from the OSAT to come in. Already 3 clients are in the place for them, the large global clients, and already they have a good technology partners in the offset. So I think the 27 is a year where the offset is also bring some growth for them, and the PCB, which will also start by second half of 27, PCB manufacturing. There also we start seeing a number from the second half of FY 27, and 28 is the majority. So there we are expecting around a 49% of EBITDA CAGR and the around 45% of a PAT CAGR story for them. So I think these two names are a preferred one for the next 1 year, where one can see a good return.
Okay, all right. Amber Enterprises and Keynes Technologies, all right. These are the two stocks that we need to watch out for. But with that thought, we have to let you go, Praveen. But thank you for helping us decode EMS sector and sharing your top picks also from the space. Wishing you once again a very happy Diwali.
Same to you. Happy Diwali. Thank you.
All right, with that, we have come to an end of this edition of Closing Bell. Tomorrow, we'll be watching out for more stock-specific reaction from the Q2 earnings result as well. And we'll also be decoding another special sector, that is your New Age stocks, on our special Diwali programming. So do come back for more. But before I let you go, let me once again also introduce you to Moneycontrol Super Pro, which can be your ultimate investment superpower. You can get all the live trading calls, investment ideas from SEBI-registered experts, pre-identified chart patterns, and AI-powered stock alerts right on your WhatsApp to help you trade and invest with confidence. So you can download the Moneycontrol app today itself and subscribe to Super Pro.